Hello, welcome to McBoss Capital channel. My name is Michael Chute. This is the US stock market video recap for the week ending July 3rd, 2026. So July 3rd Friday was actually an observation for July 4th national holiday. So in US. So the market actually ended on Thursday, and you can see for the week we actually positive. We bounced back from the previous week. We did close right near the red line here. You can see just slightly below it on the weekly chart. And on the daily chart, you can also see it is slightly below the red line, which is the 50-day moving average. So we had Monday, Tuesday, very strong bounce. I think Monday we had like 2.2%, and then Tuesday we had 1.5%. So very strong 2-day bounce, and then we give back on Wednesday and Thursday. So and then Thursday we did have a reversal from the top here, so that is the negative part. And many chip stocks, AI related stocks suffer. Even Tesla suffer. So it's a very mixed market, but for chip stocks, it's been AI related stuff, especially has been hit hard this whole week actually. Like from Tuesday, I think some of them start Tuesday, but most of them Wednesday, Thursday got hit hard in 2 days. This is the S&P weekly chart here. It looks a lot better than Nasdaq because we are above the red line here, as you can see. We also did bounce back from previous week as well. On the daily chart, again, we see Mondays, Tuesday moving up very strongly, and then Wednesday we gave back some, and Thursday we also kind of reverse from the high and close in the middle range. Okay. Now we did test the support line at the short-term moving average, so that is good. So overall, this chart looks a lot better than Nasdaq. So here's the equal weight S&P 500 from Invesco. You can see this one actually hitting new high and closing at new high as well on Thursday, which means the market is broadening in general on the S&P 500 stocks. That is a good sign for the rally because it shows that more stocks are participating in this rally, which could give momentum for the index as well and for the rally. So on the equal weight for Nasdaq 100, you see the Monday, Tuesday bounce, and Wednesday, Thursday we pull back to the 10-day. So this one looks slightly better than the Nasdaq Composite, the weighted one, just because we are still above the 10-day, whereas the Nasdaq is actually at the red line. So that's the big difference there. Here's Dow Jones. We didn't even notice any hiccup here. Like it continued its run, making new high, closing for the week at the new high. And on the daily chart, you can see Monday, Tuesday moving up, not as strong as S&P and Nasdaq, but it did kind of start to move on Wednesday, making new intraday high before pulling back. But on Thursday, it was the all-star. It actually went up versus S&P and Nasdaq was down, and you can see the difference here. It is a remarkable relative strength. You can see at the bottom here showing it is outperforming S&P. Here's Russell 2000 index. It didn't follow the same pattern as Dow. It kind of pulled back this week. So that is the negative, but that's after hitting a new high. On the daily chart, we see a Monday, Tuesday bounce here, and then Wednesday we did make an intraday high before pulling back and close at the bottom. And then Thursday we pull back more towards the green line, which is the 10-day moving average. Oh, it is still okay because we are still near the green line. So we need to see a bounce here soon. This is the CapForce IBD 50 ETF covering the top 50 growth stocks. You can see we have a negative week. Pretty bad. It closed at the red line just like Nasdaq is. Looking at the daily chart, you see Monday, Tuesday bounce here. Looks pretty good from that bounce, but then Wednesday came back down to the green line, and then Thursday we just got knocked out and came all the way to the red line. So that is the big negative. Down 4% on Friday. So many top-notch growth stocks got hit, right? Especially as I mentioned, the AI-related stocks, like data storage and so forth, and chip stocks. Here's the Treasury yield closing at 4.48%. It is starting to creep back up and sitting above the short-term moving average. It tests that short-term moving average 3 days in a row. So that is also interesting because it is starting to become a support level at the short-term moving average, and we're sitting at 4.48, which is getting close to 4.5%. So we may see more turbulence in the market if that is the case. For the week, the US dollar index here actually fell, so it came back down below the 10-day moving average here on Thursday. For the oil price, it continued its big downtrend move here. Like it looks like it's starting to head towards the black line here, 200 day. I believe the WTI is at $68 per barrel. For the week, the gold price did stabilize a bit and it's actually up for the week. It is slightly above the 10 days, still below the pink line though. So that is this is still on the downtrend momentum, but at least it has bounced back a little bit and stabilized. Silver, very similar, bounce back just near the 10-day line here. Bitcoin also doing very similar, just bouncing back to just slightly near the 10-day line here as well. For the WenX Semiconductor here, we see that this whole group here also dropping this week, down 3%. We are near the 10-week moving average or 50-day line here. On the daily chart, you can see the Monday, Tuesday bounce, and then we give back everything and more Wednesday and Thursday. And not only that, we are hitting like a 3-week low here, and now we're sitting just a little bit above the red line here on the daily chart. So very negative. Whether we will bounce, like we need to bounce here. If not, we could crash below the red line and go much further down. So whether this is turned into from a pullback to a bigger correction, we'll see. Right now it's up, it's down 11.8% from the high here. Let's look at some mega cap chip stocks here. We have Nvidia. Look at this, finding resistance at the green line, just couldn't go above it on Tuesday, Wednesday, and even Thursday. So that act like a resistance line more now, around the 200 level. And right now we're sitting at 194, and we are getting close to the black line once again. So that is not good. We have AVGO Broadcom here, also finding resistance at the green line. This is a very severe downtrend line, right? You can see how far it has come from, like, probably like 6 weeks ago from the high here. It's just very terrible looking chart right now, and we are about to break the black line, which is the 200-day moving average. Here's Taiwan Semiconductor, also following the same pattern, Monday, Tuesday up, Wednesday, Thursday down, actually sitting slightly below the low of Monday, so that's also negative and below the 10 and 21-day line here. AMD also suffering similar pattern, Monday, Tuesday up, Wednesday, Thursday down. It is now at the pink line, which is 21-day. We have ARM here finding resistance, strong resistance. You can see that the green line here coming down, and you can see Tuesday and Thursday it hit that line and it just couldn't go above it. That is very negative. And now we are getting close to the red line here, which is the 50-day. This is Intel, INTC. Looking at the chart, very similar pattern, Monday, Tuesday bounce, and then look at Wednesday, Thursday, and look at where it closed. It closed pretty much near the lows on Thursday, and again, we are below the 10-21 day now and getting closer to the 50-day. So a lot of these stocks are not only on downtrend, they found resistance recently at the short-term moving average, and also we are getting close to the main moving average, like 50-day. Another group in the tech sector, which is the software group, actually doing a lot better. Look at this, up 6% here, completely going opposite direction of the chips. And you can see here it's moving up nicely after a 4-week drop. And it is now on the daily chart. You can see it clearly above the red line. And it did, even though it closed on Thursday at the low of the range, but it still turned out to be a positive day. So this is very good progress here as we're trying to recover. It is running for 5 days now from the bottom here, and we're seeing that in many software stocks as well. Looking at Microsoft, we can see it slowly bounced from the bottom here as well. Now it is above the green line and the pink line, so the 21-day is above it now. So we'll see if it can continue to recover and eventually come above this red line, which is the 50-day. Here's Google also bouncing back from the bottom on Thursday. It did challenge the pink line here, 21-day and 10-day line as well, and it did close in the middle range. So it's just sitting right near those short-term moving average. Here's Amazon also bouncing back, and again, very similar pattern. They're sitting right near the 10-21 day. It tested the 10-day once again, and it did close at the 21-day line. Here's Meta. Meta bounced pretty hard on Wednesday on some news related to providing their cloud services. But then it did come back down really hard as well on Thursday. So that is the negative, and then you can see it is clearly found resistance at the red line, which is a really negative thing because institutions tend to trade around that red line here. Where Palantir here also bouncing very strong, it's getting closer and closer to the red line here. So this is a very strong V-shaped bounce here. We'll see. It did reverse and close at the bottom on Thursday, but we'll see if it can come back to the red line and go above it. So this is general true for all the software stocks. A lot of them are still below their 50-day and the 10-21 day. So a lot of them have bounced back above the 10-21 day, but still below the 50-day. So that's a pattern we need to see if we can clear that 50-day. Again, that will signify maybe a pretty big trend change here for the software group. As you know, they have been suffering a big drop over the last few months. Even though they try to recover, every time it recovers, it fizzles. As you can see here, even on Palantir, it has a big 3-day run, but then it just fizzle. So we'll have to watch for that. Here's Apple doing really well this week as well, bouncing back above the 10-21 day and 50-day line as well. And then on Thursday, it just came out of the gate and just break above all those moving averages. And you can see it's pretty much like a 3 or 4 week high here. It was running on good news related to their ramping of their foldable phone, and that is the reason it jumped this much, which could potentially increase their revenue since that is the new category of phones for them. Here's Tesla. It ran really well this whole week. Monday, Tuesday, Wednesday, you can see it bounced above the 10-21 day and even 50-day, the red line. But then Thursday, we had the Tesla diluting numbers, which were expected, better than expected, but the market still very concerned about, the future potential. And there's other political backlash concern as well as Michael Burry have shorted the stock. So there's a lot of negative sentiments, and that is the huge drop here. So yeah, not a good close for the week, especially after coming back above all this moving average. It's almost like a bear trap because you think that this is going to start to come out, and then it came back down this hard. So down 7%. Here's Netflix showing some improvement here. Again, bouncing back to the 10-21 day line now. So that looks pretty good. We're still in a pretty bearish pattern because the momentum is still mostly down. So if we can survive another week of bounce and come back above this red line, which will be the big determinant whether this is maybe sustainable or not in terms of this bounce. So we'll see. So here's for the week recap here. We have market actually back to it's kind of flip-flopping. It was at 60%, 80% low allocation by IBD. Went back up on Wednesday, and then Thursday came back down again as Nasdaq got a distribution day, which is a higher volume selling. So now it's sitting at 9 distribution days, which is very high for Nasdaq. We're seeing 4 in S&P right now still. Overall, we still see accumulation in stocks, 321 versus distribution, 186. We see same thing with industry group, 61 versus 41. So there's still more accumulation than distribution. On the sector side, we're seeing technology still end up positive with 5 net neutral, retail with 34 net neutral, industrial and commodities and energy actually are negative right now, which is interesting. And then we have health actually dominating all the sectors right now. So health are really strong, and financials are also showing some momentum as well, as there's more accumulation than distribution. Hope you enjoyed this video. Please like and subscribe. My next video will be coming out very soon, within the next 24 hours, which is going to showcase the growth stocks list that I follow. And as you can see, many growth stocks, especially in the AI area, has dropped significantly. We'll touch on that, and then we'll also touch on some of the health stocks and financial stocks that are doing well right now. And thank you for watching. Please like and subscribe.